So there's been a lot happening in San Diego over these past years with just the market as a whole. But today we're going to jump into kind of the mortgage side of things, a little bit of outlook on what we could see coming over this next year, especially if you're a buyer and you're thinking about purchasing over this next year. Maybe it's next summer, maybe it's next week, whatever it might be. We're going to dive into what's happening right now because obviously there's been some volatility in the interest rate market, and that ties into how much you're going to pay every month. So there's some stuff that we need to jump into, but if you guys have any questions specific, because usually it's just me on the channel, we got Amir on today. We're going to jump into his view, his insight, because he's been in the mortgage business for a long time. So he's going to fill us in. But if you have any specific questions, drop in the comments below. We'll get them answered, or feel free to reach out. I'm Chris Erickson. We got a real estate team right here in San Diego, and we got your back when making the move here in San Diego. So Amir, first thing, we've seen mortgage rates coming down over these past few weeks. A lot of the year they've been sitting around 7%. And first off, before we even get into that, when people are looking at mortgage rates online, so one source I go to is Mortgage News Daily, where they have a bunch of different metrics, different numbers. Can you let the folks know what that actually is, what they're looking at? Because obviously when they dive into it and they see it's at, 6.75 on there, and then they chat with you or chat with somebody else, it's like they're getting different numbers. So can you break that down and then get into what we're seeing right now in the interest rate in the mortgage environment?
Yeah. So when people are going online, they're looking at those streams about where mortgage rates are at. The part that's really tough to digest is that is a national average, and it has a utopic scenario built into it. So a lot of times that's displaying a 20% down payment, fantastic credit, and a loan amount under 766,500, right? That's called a conforming loan amount, right? It doesn't take into account somebody maybe putting 5 or 10% down. It doesn't take into account if somebody's doing a jumbo loan. It doesn't take into account if somebody's doing something called a high balance conforming loan, which is the loan amount above 766, but in San Diego below $1 million. All these things can impact rate. It also doesn't take into account if the collateral is a condominium or if it happens to be a manufactured home. Both these things are going to have an adverse impact on rate as well. So the way that I typically tell people to utilize those charts is they are a great beacon for where the rate is moving. Is it going up? Is it going down? It's not a great beacon to understand your specific scenario because your variables could be more favorable than what you're seeing there. They can also be a little bit worse than what you're seeing there. That's why we need to talk to you.
And that's what I always say when we're making these videos, especially doing real estate market updates, what's happening. A lot of times I cover, okay, here's San Diego County. Here's the numbers that we're seeing in San Diego County. But once you dive into a specific city, specific neighborhood, it's all different. But as we're looking at that big number, the trends, is the market going up? Is it going down? That could be kind of generalized throughout a lot of the county. Now, once you're diving into your specific situation, obviously that's a little bit different. So over these past little bit, we've seen mortgage rates come down. I just popped open Mortgage News Daily just because that's, like I said, a popular site anybody could check out. It was around 6.43%, 6.44, somewhere in there. And that's trended down from, like I said, where we're at 7%. So as we go to the latter part of this year, going into next year, what are we seeing out there? Obviously, nobody really knows what's happening. There's no perfect predictions. We're all going to get it wrong at some point. But as a trend as a whole, what can somebody expect who's potentially getting into the market over kind of the next, 6 to 12 months or so?
A couple of different things there. So markets are forward looking, right? So like everybody's really excited about the Fed meeting next month because apparently Powell is going to be lowering interest rates, right? Well, why does the market think that Powell is going to lower interest rate? Because the economic data indicates that, look, there's enough of a case here for him to bring rates down. Okay. But when I say the market's forward looking, the market starts pricing that in when the economic data comes out, not when his mouth opens up, right? And so the market's been pricing in a 50 basis point rate cut here for the last few weeks. And then it was solidified when Powell this past week talked at Jackson Hole about the fact that it's time to reverse policy. So he's even saying like, it's time to start bringing down rates. So everybody is expecting a rate cut next month. Now, how much of a rate cut is going to be interesting as far as how it impacts mortgage markets, right? So the market, like I said, is pricing in 50 basis points right now that they're going to come back, that Powell's going to say a 50 basis point rate cut. If he says a 50 basis point rate cut, mortgage rates aren't going to move because it's already priced in today. Okay. If he says 25 basis points, market's going to go up, right? Rates are going to actually go up because it's pricing in 50 today. And of course, if he says 75 or more, it'll come down further from where it's at. That's one component of what Powell is going to, how Powell is going to impact the market next week. The second component is what comes out of his mouth afterwards, right? And so, like, up until this point, one of the things he's consistently been saying is that the decision to lower rates will be data driven, right? So when they get the data to support the decision, that's when they'll make the move, right? If he continues to have that kind of evasive language, that kind of leaves a back door for him to not do something, then whatever he moves as far as rates are concerned, that would be the impact. If he has verbiage in there that says we feel like we should continue to loosen policy, right? That tells the market that whatever basis point cut you got now, there's another one coming on the horizon. Rates will come down, right? And so one of the things for home buyers when they're looking at this stuff is in a year from now, will rates be lower than they are today? Unequivocally, yes. It will be lower in a year than they are today. But it's a double-edged sword, right? Because you're out there in the market and you know how much inventory doesn't exist, right? This is a nationwide stat. Every 100 basis points that the rates come down, right? So they go from 7 to 6, we unlock 5 million home buyers in the US. And there's an inventory problem all over. San Diego's a hyperbolic example of that, right? Because it's such a desirable place to live. But basically, rates come down, more buyers enter the market, right? And so while people might have some curb appeal and thinking that, like, look, if I wait a year, mortgages would be more affordable. Maybe that's the time to make a move. Well, you're also going to be coming into an environment where there's more buyers, more competitions, higher prices, right? So either you're paying higher prices or higher rates today. You got to make that choice.
As they are 7%, as they were above there, we've seen a little bit of a slowdown as far as buyer demand out there in the market. When we're writing offers with clients, instead of that 2 years ago where it was 5, 10, 15 offers, now we're competing against maybe 2, 3 offers. We just wrote a offer over the weekend, and I believe there was at least one other offer, maybe 2 other offers on the property. So still a little bit of competition. A lot of home buyers who were out there previously when we went through the frenzy of 2022 in the previous year as well, there was a ton of home buyers, and some of those are people who didn't get in homes and have gone to the sidelines because interest rates have gone up. So like you said, double-edged sword, at what point does that marginal demand come back into the market where competition starts up? Now, at that point, will we see some unlock in inventory in the number of homes coming on the market? That's what we keep saying. Hey, so at some point, people are going to move. But the last 2 years, it's kind of tracked a little bit sideways, where this year we're tracking up. We're above where we were last year a little bit, but we're still not where we were at that normalized market of, let's say, 2019. We're about, 60% of where they were there for homes in San Diego. So if we still stay on track where we are now and interest rates fall and more buyers come in the market, then yeah, you could definitely expect a bit more competition as a buyer out there. But obviously, it comes down to your situation. Where are you at right now? Are you trying to get in the market right now? Are you planning for next year? Another big change that has happened recently is how buyer's agents, how we get paid. Used to be where the listing agent would negotiate with the seller, and we would co-broke with that listing agent. Now, as a buyer out there, you're having to sign an agreement with your agent, go over all the terms of the agreement. A lot of times we are writing those into offers, but as far from the lending side, what are you seeing? Have you seen any changes with that it just happened. The 17th was kind of the deadline. Here in San Diego, it started a little bit earlier, or certain MLSs like the 13th. But nonetheless, it's been a few weeks. Have you seen, is there any changes on the horizon for the lending front, or how potential buyers are, is there going to be any effect on their loan per se?
So there's an impact on underwriting. There's an impact on the loan, right? On the loan side, or I should say not so much of an impact on the loan. On the loan side, depending on the loan program, you are capped on how much you can ask back from a seller to help you out with your closing costs, right? When these changes first started coming into effect, there was some convoluted data about how, if a seller's paying the agent commissions, does not take away from how much they can contribute to the closing costs. Well, regulatory framework came out, and these two things are separate, right? So in some loan programs, you can ask for a maximum of 3% back, and all the way up to, in some programs, you can ask for up to 9% back. This is an independent factor from what the seller is paying for the buyer's representation, right? So that part is great because they should be treated independently, right? If the seller's not paying the agent commissions, one of the structural changes in the loan is we have to document they have enough cash to close. So previously, before these changes went into effect, we just had to make sure they had enough for the down payment, had enough for the closing costs that the seller was going to pay for. Now, we need those two things. And if they're going to be responsible for paying agent commissions, we got to make sure that they have enough money to do that as well. So that is an architectural change that we're seeing.
When people are starting to look, one of the first things is get all this information up front. Kind of build your team right up front. Find your agent. Before it was, like I said, sellers would take care of it. Now there's a different conversation that's going to happen. Find your lender, your mortgage broker early. Start those conversations, because the more you get done up front, the better off you're going to be. Once you start getting into that situation where you're actually out in the field, we call it the field. Once you're out in the world looking at homes, and there's a little bit more stress out there, there's a little bit more going on. And so the more educated you get up front, obviously the better off you are. One thing is, like, have those conversations. So like I said, you can reach out to us. We'll hook you up with Amir, who is been in the business for a long time, like I said, and kind of walk you through different scenarios. One thing that I did see on a podcast, so you're a broker where you could kind of shop around. There's different things. We'll get into another video breaking that all down. I was just listening to, I forget what podcast it was, but they were breaking down, or somebody mentioned that they had a client who was looking at banks. And we've always had kind of a, not love hate, but just like, it's a different process working with a bank than working with, somebody local right here. And sometimes the banks, they have local people, obviously. They mentioned that the bank rate that people are seeing right now is significantly less than what we're seeing in just, like if you go to a mortgage broker stuff. Have you seen any of that? And if so, what would the case be? Or do you just kind of focus on, the programs that you have?
Yeah, that's a great that's a great question. It's a little bit of a smoke and mirrors situation, right? Because oftentimes what you're going to see when you see those bank rates, banks are going to charge you points and fees, like a standard 1% origination. Look, if you've got $1 million loan, that's 10 grand that they're charging you for a fee. And then they can advertise the lower rate to you, right? So you're seeing a lot of that happening where there's points and fees on the loan. And that's what's creating these lower rates. But people usually look at what the rate is, and that's usually the hot button. And they don't necessarily know if the costs that are associated with the rates are standard, are normal, whatever the case may be. When it comes to mortgage lending now, wholesale or a mortgage broker is even more critical of a component now in the home buying process. And the reason being is because you can control your costs, right? So as brokers, we don't charge you any fees. We don't charge you an application underwriting processing fee, origination fee. We don't charge you any of these fees. So let's just say you're buying a home, and let's say you make this offer. Now you've got your down payment. Let's say the seller's not paying your closing costs. Now you're going to pay your own closing costs. And let's say they're not willing to pay the agent commissions and you have to pay them. Now you have another bill on top of that as well. The lender fees are going to play a greater and greater role and are going to create a barrier to entry for you. You need to have a system in place where you have the ability to have no lender fees, because it's going to make buying a home a little bit more affordable when you have this extra wrench that was going into the mix.
If you have some questions, reach out to us, because we'll help you out, dive in. We've been in the business for a while, and really just help you answer those initial questions, and then dive into, obviously, the whole process, all that kind of stuff. So as a quick reminder, if you guys are thinking about making a move here, whether it's next week or next year, whatever it might be, all of our contact info is right below. So feel free to reach out, because we got your back when making the move here in San Diego.